Welcome to the Commercial Real Estate Podcast powered by First National. I am Adam, sitting with Aaron at day one of the Toronto Real Estate Forum, one of our favorite events of the year. We are doing our speaker video series as always. This episode is sponsored by Glass Lake Funding. We thank them for that, of course, and for the Real Estate Forum for hosting us here. But Thomas, welcome.
Okay, thanks, Adam, and nice to see you both again, and Aaron.
Yeah.
I enjoyed our last podcast 2 years ago, and it's true, a lot has changed, and it's very interesting. Probably most people in the industry know that kind of the whole acronym of ESG is being re-examined. Some people are kind of abandoning it altogether, but I would say what we learned from the industry, that the E, so the environment side continues to be strong, but there's a certain level of, I would say, recalibration now. Not retreat, but recalibration in terms of what makes sense moving forward, because we know capital is scarcer, and so the industry is reevaluating right now. But overall, we continue to go into that direction, which is it's obviously something that we support, because it's been entrenched in the industry for like over a decade now, to green buildings, to LEED certified buildings. And of course, the challenge now is how to, if you have entire portfolios of buildings, how are you going to decarbonize them leading up to 2050, right, over the next 25 years? And the fact is that from a policy perspective, like both global and domestic, buildings are still considered to be essential for any country, and that includes Canada, to reach its carbon targets. Do we will reach them exactly on that year? Probably not. But the trajectory is there that building new buildings and existing buildings need to decarbonize. So we still have a direction there on what needs to happen, and particularly around new buildings should be in net zero or net zero ready at least, and existing buildings should get close to low carbon as possible, given the type of asset, where it's located, how it's capitalized, those types of things, right? So it's not one size fits all, but there's a general direction. In the Carney government that we're all still getting used to, and it was really interesting. I listened to a talk by Chantal Hébert, the CBC reporter, and she said something really interesting. She said, I covered 5 prime ministers, and I knew all of them because they were in the House of Commons, they were an MP, maybe tried a couple of times for leadership of the party and then get through election. So you kind of knew who we were getting. But with Carney, we don't. He just showed up. He
was the treasurer. He was the treasury guy.
The treasury guy. But from a policy guy, like they look at it from a policy perspective, right?
And no voting record or anything.
No voting record, never served as an MP or anything, right? He's a public figure, but from a political point of view, it wasn't very well understood. But I think the thing is too, like he, in his time as the governor of Bank of England, he wrote this book, Values, greatly committed to sustainability and ESG, including the building sector, which I think he understands quite well. And so we're looking, what are the policies coming out of this government now? We had the first budget, which was put together pretty quickly. There's some good things in there. One is he's relying more, I would say, on financial markets and financial mechanisms to achieve decarbonization goals. He embeds it in this whole concept of global competitiveness, supporting economic growth, and innovation, and by Canadian. So it's not a standalone pillar anymore. Climate change is integrated in anything we do economically, including real estate. So the one thing that's really interesting that they finally said to move forward with is a green taxonomy, which is actually a classification system for investors to classify what constitutes a sustainability or a decarbonization investment. And the building sector is one of the top 5 sectors they're going to look at first. So that was interesting. Other countries have done this already. The taxonomy has been around for 5-6 years in the European Union. Australia just put one in place. I understand. I think China has other one under development, is putting one in place. It's just to crowd in investment. And define in Canada what represents a green investment, in this case, an investment in a green building. What does that mean, actually? So you have some assurances in terms of the...
So is it just like a benchmarking score?
It's more like not a benchmark, it's more like a classification system that, for example, says, a green building in Canada, or a zero carbon building in Canada represents that 90% of the primary energy source comes from non-carbon sources. right? So something like that. So the investor knows what they're actually investing in. And of course, it has to be aligned with international targets, but it helps to attract capital, particularly green capital, into Canada. The second one is, which is connected, he wants to establish disclosure rules, work with the provinces and territories across the country. So how you disclose your investments, how you disclose your carbon investments to the market, so the market has more information, more transparency, what you actually have done, right? And the third one was to establish a sustainable bonds framework. It was in the budget, but we actually don't know what it means. But these are three financial mechanisms that he introduces in part of the budget to move climate change forward and help, Canada achieve its targets. And then a significant investment in housing. There's a $7.3 billion investment. He created BCH, Build Canada Homes, which essentially is I think it might be a Crown corporation now, it took a while. Basically is a financing organization. Working with Canada Lands, who disposes of and make sure that government-owned land gets into the development cycle, so they work together under the auspices of Housing, Infrastructure and Communities Canada. So Gregor Robertson, who is now the minister of that portfolio, and they said that sustainability is included. And they haven't defined it yet, but it is important to this government, the sustainability, particularly energy efficiency. Energy efficiency and decarbonization is important, but we shouldn't also not disregard health aspects as well. So we work with the government right now and saying, what does that actually mean for you? We know what it means for us. What does it mean for you? And how could this be delivered at scale? So I think we kind of missed the first wave of these investments, but in the second wave, there could be a clear definition what it would mean for those builders or developers that use government financing and build on government land, and what the government's expectations are in terms of not only affordability, but also in terms of sustainability, right? Because, and I'm talking particularly about purpose-built rental, because I think that has a business model around it. Because don't forget, people going to be stuck with buildings that might have very high utility costs if they build to code. So that's an interesting stat. So we want to build 5.8 million units of housing over the next X years. If we build them to current standards and codes, it would add 1.8 million tons of greenhouse gas emissions to the atmosphere every year. So there is a reason that we need to look at, and people have to pay for energy. They have to pay for energy, so we have to look at what we call total cost of ownership. But the question is, of course, how are you going to get there? And how are you going to get there, I would say, is probably the government has to somehow incentivize the builders, either through land costs, better financing terms, to get the outcomes that they're looking for.
I was going to ask that. Was there anything missing from the budget that you thought should have been there? The incentive side or regulatory side or anything that?
It's a good question. I would have thought it could have been a little bit clearer, right? A little bit clearer where I think they did it in very quickly. My colleagues in other environmental organizations are obviously not very happy about all the investments we're making now in natural resource, particularly oil and gas. And you can debate that if it's the right investment now and if it's still going to provide returns to Canadians 30 years from now. But I think many environmental groups are very unhappy about that. I think we're kind of neutral on it. We're focusing more on, we don't focus on the resource sector. We focus more, of course, on the real estate side. But this transitioning out, that many people didn't like that and were somewhat taken aback by it. But also, I think there's an understanding. We are in very dire economic situations, right? And Canada needs to build out this resource base to compete globally. But we still expect, like I said earlier, from the Prime Minister and Prime Minister's office, that there will be an investment in sustainability as well in the next budget a year from now. That we actually have some clarity where Canada's heading in that regard.
Yeah, you can't ignore that we've got the resources and just leave it in the ground and not do anything with it, in perpetuity. Like at some point, I think if you're going to do anything with it, you may as well do it now. And it doesn't mean that you don't spend energy and time on other aspects, whether that be, supporting the lumber industry or other sources. It's funny, as I'm sitting here listening to you talk about kind of where your industry is, or, our industry is as it relates to sort of ESG. It doesn't come up nearly as often as it used to in conversations that we would have with the community, while doing this podcast. I think part of that is just, there was a period of time there, where there was lots of liquidity, there was lots of tailwinds, and so business was good, and everybody was making lots of money, and so there was a time and energy to put attention towards things like this. And of course, now that we've got a shifting, end of a cycle, let's call it, and a repivot, there just isn't the same amount of time and energy to focus, and so you feel like that conversation on sustainability has decreased, and I think that's just part of the cycle. But I feel like listening to you talk, there's optimism that as we move into the next era, the next cycle, that sustainability will be even bigger and part of more of a core of the decision making. And I was thinking about why that is, and it's just generational, right? As you over a period of time, you got new generation comes in, they've grown up in a different environment. Obviously, like my kids think about recycling very different than I did when I was their age, because we didn't have blue bins when I was 10.
For you, it was an add-on. For you, it was an add-on. It's something I have to do now, right?
And my kids, it's a totally different. So and I'm not sure that's true for all the next generations as they're coming through, and so they're starting to have more capability, more decision making on the corporations that are doing these buildings, and so it just becomes more and more just part of our culture, and it just becomes table stakes.
Yeah, but I mean, you raise a good point there, and around. There was a lot of time, a lot of investment in sustainability over the last few years, and now it's taking a little, like I said, another
like look. A deep breath, like a pause. Yeah,
it would be a mistake, particularly in real estate. Because real estate is kind of the long game, right? It's not like you're buying a car and say, I don't like it anymore, I'm going to sell it after 5 years. But it's the long game, and it would be a mistake for anyone to disregard the risks that are associated with either having an asset that doesn't perform to a certain level. If you want to sell it, you have tenants that have expectations to be in assets like that. Like JLL did a study. It's basically said in Toronto, over the next 10 years, there will be like a 59 and 60% gap between what's on the market in terms of decarbonized assets for office and what's, and what the market actually wants. This gap is widening because nobody's building it, right? So it's a risk in terms of from a market perspective. But it's also a risk from a physical perspective, from a physical risk, and we haven't really started to really look at that. So you have two risks now, where you're starting to say, how do I going to invest in my buildings so that I'm prepared for the future? And it also connects to the investment as well, because investors, they come from outside. If you're a European investor, they kind of come in and looking at this and say, I'm not investing in this building because it doesn't even meet minimum requirements as far as I'm concerned. So there's also changing investment climate now around this issue. So I think my recommendation, I know many in the commercial real estate sector, particularly institutional investors, have already made that decision that it becomes an integral part of decision making.
Well, I can tell you, mentioning the word climate resiliency, 3 years ago, people would have just stared at you blankly. Yeah. And I think a lot of people go, I know what that is and I understand it. It hasn't made its way into the decision making capacity, but it's certainly, some people are aware of it now. Yeah. And they weren't before.
Yeah, I mean, there's, typically people think about climate risk, usually think floods, right? Mm-hmm. Well, the government is looking at the new flood maps, right? So there's going to be some assets that all of a sudden we're in a floodplain, all of a sudden they're on a floodplain, right? So that's an issue. But there are other risks as well. I mean, there's, for example, like, I'm from Vancouver, right? I'm from Western Canada. Forest fires, the air quality is so poor, right? You can't go outside. But if you don't have a building that's airtight, that has proper ventilation, you're going to have it indoors as well. That's bad for people. Right, you don't know how bad this actually is for your lungs, and particularly for children and so on. So there is that. It's not just floods. It's also high temperature, like heat, fires. I mean, people die from overheating, right? And there's a fair amount of Canadians, they don't have access to cooling.
Well, Vancouver would be an example.
Vancouver would be an example, exactly. So there is that, on the one hand, you have people that can afford energy. 20% of Canadians already live in energy poverty in their homes. People cannot maintain a safe indoor temperature in their homes.
What does energy poverty mean in terms of?
They can't afford. They basically
Okay,
they
so
have to
it
make
is
a choice:
economics,
do I have a warm home, or am I going to buy food, or what am I going to do? So they are already living in energy poverty. That's the term now that's being used now, and people typically don't know that. But we say, is it a food bank? Absolutely. But what about living in a unit that is low on low utility costs, so you don't have to pay so much, you have more disposable income. So it's you have to look at it both from a social as well as an affordable housing side, from a social as well as from a kind of environmental and from a monetary point of view.
This sounds blunt, but there's the so what, right, that always kind of underlines some of these conversations. And we talk about climate resiliency. I still don't think anybody pays less or pays more as a result of that yet, at least in Canada. I'm sure other parts of the world they do. From an energy efficiency perspective, I don't think tenants, again, I'm talking about apartments, maybe it's different for commercial. I don't think tenants are paying more rent because one building's got geothermal versus the others, right? So there's still this lack of impact on development costs and yields that will really drive the momentum. What do you say to that, or how do you kind of wrap that around in your head?
Always a good question. Look, I mean, on the housing side particularly, it's a bifurcated market, right? The builders that say, oh, we can't do this, it's too expensive, there's no profit in there for me, right? But the fact is, we alone, over the last 10 years, we certified 90,000 units of housing to LEED. And we have now a pilot on the way for zero carbon for low-rise Part 9 buildings. So these are developers across the country that have done that. And the reason why it's worked for them is because they didn't see it as an art and actually build it into the business model. And they actually have people within their organization that have the skill set and the know-how, and you're working with contractors and others that have the skills to actually deliver those units, right? So I would say on the housing side, many in the industry have not gone through that learning curve. And of course, if you didn't go through the learning curve, you're not going to make it. It's more expensive. Of course it is. And I'm not saying that it's not more expensive, because it uses new technologies, it uses new skills, and so on. Yes, and so on. But in terms of the long-term cost, there's no doubt that you come out way ahead.
So there is a straightforward economic case if you underwrite to capture all the benefits.
Yeah.
And then does that include layering in incentives? Because of course there is,
I would want to. I mean, the developers we are working with, they've done it because they have a good business model. It includes developers like Tridel, for example, or Minto, or like these are well-known developers. Even Westbank has built like not zero carbon, but LEED buildings, housing, and so on. Condominium towers. So there are many examples across the country: low-rise, mid-rise, high-rise, right? So, but we want to now get the majority of the industry on board. I mean, we want to get the majority on board or get over that hump into what we call the early majority, right? Not the innovators, but the early majority. I think you need incentives, right? You need government incentives. And that's what we would want. That's when we're going to move forward to talk to this government. They said, what are your incentives in terms of covering these extra costs that the developer would have? And then having the outcomes that we want to see, because it's like, again, it's taxpayers' money. It's taxpayers' land. I'm not talking about the private sector developers with their own land. It's even a more difficult business model.
Well, but I feel like, and you can't do this. And so I know it's impossible, but you feel like, you're looking at two different pro formas, same site. One has sort of lots, let's call it geothermal and other investments that are more expensive for that building. But guess what, Mr. Developer? If you do that and spend the more money today, when you go to sell it in 20 years, it's going to be worth 30% more just because you spent that money. And so that $10 million of extra investment, let's say, is going to save you $30 million in value at the end. Yeah. It would go, no brainer. But you just can't prove that that's going to be true in 20 years from now, right? So how do you do it? Right?
It's true. I think there's a certain belief that that's true. We actually just had that discussion around that the operating costs alone will not cover the additional costs, right? We know that.
That math doesn't work perfectly. Right?
Yeah, no, it doesn't. And we currently engaged with RealPAC and the Appraisal Institute of Canada to look at valuation standards, right? And how investments in sustainability and decarbonization could be, like, what's the guidance for appraisers to recognize that? And we had a meeting last week, and we're going to have another meeting. We had both the big appraisal companies there, as well as some of the owners, and as well as the AIC. To say what would be the path forward, because you're absolutely right. Like, if you want to sell it 30 years from now, how do you evaluate every year, or often depends on how often they do it. How do you recognize your investment in sustainability in that asset? Because if you can recognize it and account for it, then there's evidence, and there's many reports actually. I'd be happy to give you the list, work that's been done across the world. That actually these buildings are valued at a higher level.
Yeah, and I believe it. It's just, you have to believe. It's hard to quantify.
Research. You need research.
Yeah,
you need
well,
academic research. Look at it too.
I'll tell you. Like, I mean, from a lending perspective, it's not built into our process at all. I mean, we do a lot of CMHC insured financing.
Well, that part is the incentive part is, but the trying to capture the economics behind it aren't.
What I'm getting at is, like, we're offering mortgages with 50-year amortizations. Now, they're insured, but I, in theory, am tied to that asset for 50 years. I'd like to have a little bit more comfort that it's not in a flood zone, that it's got climate resiliency, that the investments are there for the valuation to withstand some of the challenges it's going to face. But you don't, again, it's just not built into any part of our system, or sort of the real estate transaction system. And I'm assuming AACI, and then you probably have to go to the sort of the building conditions, the engineers to talk through some of this stuff too, to really start providing the data for the capital.
There was actually something in that meeting came up repeatedly, is the data, right? And the fact is, it's the AIC that needs to lead that, right? They're the appraisers. And apparently in the 2026, they call it CUSPAP, that's their standard.
Okay.
They already have some ESG criteria in there, following the international standard to put the ESG criteria in last year. So there's internationally too, they're starting to put that in. But I agree with you that we don't have enough data. It's not built into the process. And it also includes insurance as well.
Well, I was going to go there next. Like, I mean, that is the only place where we are seeing it, is where, flood insurance costs are skyrocketing for those that are probably exposed to it unknowingly. And they're coming saying, I'd like not to pay for this coverage. And we're saying, well, yeah, I wouldn't either if I were you. Yeah, because it's really expensive, but that's the reality. And we're getting it, but we're seeing that escalation. So the insurance companies are underwriting these risks in a little bit, but not to any major degree.
Well, in 2024 was the highest payout for weather-related events in Canada by Canadian insurers.
Sure, I believe it.
Right,
yeah.
So they need to be concerned about that. I mean, we already have in the States, like always use Florida, already have stopped insuring residential property. So I think the state has stepped in that regard, but I don't think that's a good model either for the government to step in to provide insurance.
Because you can't get financing without the insurance.
Yeah, exactly. So
it caters the entire housing market in Florida.
Yeah, exactly. But it could be a lose-lose situation for the state in terms of, with the hurricanes they're getting and so on. But it's absolutely right. It's not built in, and we are doing some work right now to look at the business case, but more from a financial point of view, like your pro formas, right? For different asset classes, including housing, like purpose-built rental, housing, office, industrial, and logistics. So we use this. We have already started the work. So for the next half a year, by Q2, we're going to issue reports that we're working with PwC. To help us articulate the business case. And then once you have that, you can then more clearly articulate, what kind of incentives would be needed and what actually needs to happen, both from an incentive point of view, financing point of view, insurance point of view. And do the insurance companies, which we still don't know, they don't look at what we're doing the same way what they need, right? So when we think about resiliency, we haven't really mapped that out. Like when we think about resiliency and how they think about resiliency to reduce the insurable losses, they look at it in a different way. So there's some work to be done.
I think they've got much more of a sort of actuarial, what's the bottom line cost to this than you guys do.
They kind of have to. I think we're almost out of time, but I did want to ask you one very specific question to Aaron and myself. Big news in our industry. Last week, CMHC changed their energy efficiency guidelines for their very popular MLI Select program. For anybody who's not paying attention, Previously, it was 40% above NECB 2017. That's a building code from 2017. They moved to the 2020 building code, which would then ramp up demands on energy efficiency and also change the maximum gap to 60%. I assume that you would be for this initiative, but what do you think the developer response is going to be? Is that achievable? What's your view on CMHC's shift here?
I welcome it, and we welcome it from a kind of a where we want to move the industry towards, right? In the direction we want to move the industry into. I'm not a codes person, so you really we have to ask the codes person, how much more is that, right? The only thing I can tell you, the 60% target is in line what we look in terms of energy efficiency improvements in our zero carbon standard for design for new builds. So it is a kind of aligned there. And I mean, we have the 2025 code is out now. This is the 2020 code that they're aligning us to. But that's, how should I put it? That's the direction the industry needs to go into. There's just the quality of our housing. Let's not talk about sustainability. Let's just talk about the quality of our housing. It's just not as good as it should be, or as it could be. Compared to when you look at other G7, if you look in Europe, they build totally different than we do for many, many years, right? They build it into the industry. And I think it's a fair direction. Quality includes energy efficiency from our point of view. It is a cost to people who occupy those buildings. And if you have poor buildings that are have a poor envelope, they have poor mechanical systems, they're not airtight enough and those types of things, it's just not the future. If you want to build a competitive economy, that includes also your buildings, right? And it's the same with housing. I think for developers, generally, it's probably going to be a stretch to get there. But there are many examples out there from the peers that have already done this for years. So I would suggest that what really needs to happen is that the developers actually starting to get the skills developed, and the trades getting the skills developed to build buildings like that.
Yeah. Well, and back to the original, if they could convince themselves it would be worth more in the long run, it's worth the investment today. But again, that's you have to just believe that that's true.
You'll get your job promotion in 20 years when it proves out. It's,
yeah, exactly.
I know how the industry works, and we always work because we are governed in a federation, right, in Canada. It's not like when you do something in the UK, policy applies to the UK, right? We live in a federation, so it is harder to have policy consistency so that the industry knows what's expected, right? Because it changes. You have a different prime minister, you have a different premier, you have to go from this to that, and then everything changes. You have a different mayor, they change it, and it's really difficult to anticipate where the market is going and what should you invest in, because you don't know what the outcome is. But aside from government policy, you do know that whatever you do in the building sector now, it has to be more energy efficient, it has to use less carbon, and it has to be resilient. And that's not going to go away. That's going to be here in 10 years, 15 years, 20 years. In fact, I would say after the kind of dip we're in right now, when we pick it up again, I think there will be more ambition around it again, because it's kind of something that's inevitable. It's like the sun's coming up every morning.
Yeah, that would be, I think, my sense too, is that it's becoming just part of the business. Yeah. It used to be this thing that we all had to do because it was, good to have in your public, image. But now it feels like it's part of it.
Part of the business.
Yeah.
It should be part of what we are as Canadians.
Yeah, no, and that's the next label, right? Everybody, and that's we had. You want it to come from the ground up, right? It has to come from the people to be asking for it, demanding it.
Yeah, I mean they do it with EVs now.
Yeah,
they do it with groceries, which is a little harder. They buy organic groceries. They do EVs. They recycle. But your biggest investment is your house. That's where you spend most of the money, and some people are recognizing that now, and other ones are still on a learning curve. That's where we come in.
Yeah, exactly. That's why you're here. Well, Thomas, unfortunately, we're out of time, but we really appreciate you coming on. Again, it was a great conversation as always. I'd like to thank the Real Estate Forum for hosting us here at the Toronto Real Estate Forum. Of course, thanks to Glass Lake for sponsoring this episode. Thanks again, Thomas.
Okay, thank you both. Nice to see you again. Good conversation. Enjoyed that.
Yeah.
Thank you.